Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look at the gold market. So as I said in today's Forex video, yesterday we've got the mini apocalypse. So lots of negative moments just have coincided in same moment. We've got first poor ISM manufacturing, then some announcement of the probes, antitrust probes against Nvidia, then some news on the drop of the consumption in China, drop on the Japanese market for 4%, and all the stuff of putting together have increased fears of the investors starting a recession, drop on the crude oil as well. So all this stuff has just crushed the stock market. So if we take a look on the S&P, here we've got the perfect double ripple on top, by the way, and market started this drop. Supposedly it should continue because reversal was relatively sharp. Automatically expectations on the possible 50 basis point rate cut have increased. So for now I still think that things that we already have are not enough to cut the rate for the 50 points, but nothing is impossible, and if we get poor payrolls and low CPI next week, chances will increase significantly. But in this case, as we already talked about this, and actually on Telegram as well, so 25 basis points cut, this is increasing fears of the recession for the Powell. 50% basis point cuts increase fears of the rebounding on the inflation. So this is really big headache for the Fed. What particular scenario they will choose, we will see. But for now, as you could see, that gold is falling together with the yields on the 10-year bonds. This is indicator of the recession fears. At the same time, if you take a look on the gold, I wouldn't overestimate the drop, because we do know for a long time already that market stands overextended. Big external supportive factors just haven't led it to show the pullback, to show tactical retracement. Now it seems very comfortable situation for the gold to show it, because here market hasn't reached even the 30% support of the butterfly action. I wouldn't speak on a larger scale, where we actually could get retracement even back to the 23, or even big head and shoulders here, right? With this deep retracement, it will not break the overall bullish tendency, even so big retracement, because we just too habit for constant upward action on the gold market. So retracements also sometimes are needed. So speaking about the short-term performance, on the weekend we said that we need to wait for some clarity, and here market is coming to the level that's really vital for the short-term scenario. This is 2470 support. This is trend line with broken consolidations, some kind of the triangle. Grubber has been erased, so we would not pay attention to it anymore. And this is actual retracement after 127 extension of the butterfly. Chances that market will reverse up and keep going higher also exist, because numbers that we will get might be really important and could change the situation drastically. So I wouldn't say currently that we should forget about these targets. So we still keep them on the table. Now the major thing to watch is what will happen with these 2470, 2460 confidence support, and you can see here is also trend line support. Of course, currently take the short position is a bit too late, because market stands too close to the support area, and you'd not want to get short position right at the support. This is not good decision. Nominal context on the daily chart has turned bearish, so we have bearish context, trend has turned bearish, we don't have any bullish directional patterns. So from that standpoint of view, theoretically we should watch for possible bearish patterns for downside continuation, but this is possible only if market will jump up and also will keep the bearish context. Currently at these levels, as I said, this is not a good idea. For those who trade on the intraday chart, scalp traders, this is good level to consider possible patterns for short-term bounce, because technically market should respect this strong support and show some at least minimal bounce up from here, and that might be the background for scalp long trade on intraday charts. But for now, if we take a look at the hourly chart, I personally see nothing yet. So yes, market is coming to the XLP target, this EBCD. That actually creates an agreement with the same support, but I do not see yet any reasons to go long. So for scalp long position, you have to wait and see what will happen around it. Maybe even drop time frame more to the 15-minute chart and watch for possible patterns there. Because if market will break it down, it will open this trading range for the gold market. So easily it will be able to fluctuate inside of it, right back down to the 2350 area. So that is what will happen if market will drop below 24/7. That's why in the current moment, long-term traders who trade on a daily time frame just should wait and see what will happen. I do not see any background for taking position here. Scalp traders should watch for response on this support area and watch for patterns that may be formed there, because it might become the background for good intraday trade.